What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at the New York AM session on EURUSD, where there was the potential to bag a 3.2R trade based on the ICT 2022 mentorship entry model. Let's jump into the charts now, review the analysis and see how we came up with this setup. So for this we're going to start the analysis off on the 15-minute time frame, taking note of our areas of liquidity and also keeping in mind that we do have a red folder news drop at 8:30 today. And so the levels that I'm interested in are obviously Asia low, which is untapped liquidity, New York low from Monday, so that's yesterday's low, again untapped liquidity. We have the New York session high from yesterday has been taken in London and we're pulling back a little bit. Then we've got London high from yesterday, again untapped liquidity. Key area here is this 15-minute fair value gap. It's a relatively small fair value gap that was created in the London session yesterday, but it has been respected several times, causing this drop. So I'm going to keep that on the chart just as a point of reference. And also I'm noting that this is just under this optimal trade entry from Friday's New York high to the New York low put in on Monday. So this larger range, that's the optimal trade entry there. So potentially this could offer us some resistance if we do come up here, or we could take a reversal trade if we sweep that liquidity there. So those are the areas I am interested in looking at. Drop onto the 5-minute. We're not going to be doing anything initially until the news drops. And then we're going to see what we are offered. So we'll skip forward until the news release. Okay, so the news has driven us down. It's taken Asia low and London low. I'm not going to trade anything as a result of this price action because this is just news driven price action, which I often find can be very unreliable as far as setups go. So such as this, some may look at this as a valid optimal trade entry on the 5-minute. We've swept liquidity, we've had a break of structure with a candle body close on the 5-minute, and then looking for an optimal trade entry of this range. I wouldn't take that personally because you will often find that news driven price action can be fully retraced with all of the confluences being totally ignored. So I wouldn't be looking for longs here. What I am interested in is what happens as we sweep this high and potentially get up to these areas up here. So we have swept that high. What I'm going to do is I'm going to drop to the 1-minute time frame. So I'm finding in these tight markets that we've got at the moment, which have got a little bit less volatility than we would like over the summer break, the 1-minute is providing better price action. It allows us to get in and out of trades much quicker, so we're having less time exposed to potentially losing money. So we've swept liquidity from the London high. I'm looking for the 2022 model reversal at this point, which is a break of structure with displacement and then an entry on the retracement back into the fair value gap displacement. So this would be our swing low for the break of structure at the moment. Now we'll put in a new high there into that 15-minute fair value gap. This would be our new break of structure. So candle higher to the left, higher to the right. So this lower swing is our swing low. So we'll be looking for a break of structure there. Higher. So again, our break of structure is now up here. This is the new candle high. Okay, so we've got a close on there. That is a break of structure. That's a definite break of structure with a fair value gap. So what I'm noting at this point is candle body close, fair value gap, bigger candles coming down than that were going up, so confirming displacement to us, and this is a breaker block. This is the last up closed candle before we put in these highs, so I would class this as our breaker block. Fair value gap inside a breaker block. That's the magic unicorn entry that you hear on YouTube people talking about. Stop loss will be just above the high at this point. Okay, so we're putting another fair value gap here. So this is another fair value gap at the bottom of that breaker block. So the entry would be here. For a target, what's standing out to me is this swing low here. What would be worth doing, and what is a really good habit to get into, is looking at where premium and discount is of the current session. So anything above 50% on the fib, so this is our 50% mark, this is a premium. This is where we're looking for sells. Anything below 50% is a discount. This is where we're looking for buys. So we can see at the 50% level, we do have a fair value gap. We do have this order block area as well. Mark out the 50% of that fair value gap that's within that order block. So that will be an area of interest. And funnily enough, the fair value gap is exactly at 50% as well. There's two options here really. You could run it to the fair value gap, 2.29, which would be a healthy trade. So we're tagged in, we've tapped the first fair value gap here, bottom of the breaker block. Price is driving away nicely now. Okay, so we're getting a pullback, coming up to 9.45 I believe. Yep, so we've got a new 15-minute candle opening here, so that's a new 15. Still kind of consolidating. I'm back at entry here. Okay, so we're coming into the new hourly candle now. So this is where we would hope some volume would come in. So as the open of the new hourly candle, we've left the fair value gap at 9.58, 9.59, 10, comes back into the fair value gap. This is interesting. 50% of that fair value gap was respected. So we had a close, respected on the open of the new candle, and then a close below it. So that's a good sign. Nice drive down, so the 50% of that fair value gap has held really well. Good price action. We've taken this low, which would be sell side. So you could potentially be taking some profit there if you just wanted to get some money off the table. We've taken a swing low here, so that would be a sensible place to take some profit. Holding this down to a discount to ultimately close out the trade. That looks like it's hit. So yeah, there's a really nice 2R. So we're into the discount there. You would ultimately expect this swing low at least to get swept. Now this swing low is right on optimal trade entry of that level there. So if you were brave, you could be holding this out for a 3R trade, which would be nice, closing out our optimal trade entry of the range. Okay, so we're getting a pullback literally as soon as we've touched the 50%, we're getting a pullback. So we're back at entry. Coming to 11 AM now. So again, open of another hour. So we've just swept the 10 AM high. Long drawn out trade. So this is one where you would have to walk away, I think. I'd be getting very stressed if I sat through this. Was that tapped it? Yeah, so that's finally hit the take profit into the lunch hour. So 12:30, the lunch hour has driven down, hit optimal trade entry. So you would be in the trade for quite a long time if you were going to hold out for that 3.2R. But ultimately quite a nice trade. 2 times you're hitting drawdown though. So you come back after the initial entry, price pulls away, pulls back again into this breaker block at well, just before 11, 10.10, 10.50. and then ultimately drops away again at where 11 was the actual drive down. And then up to current price action, and up to current price action, we're just kind of consolidating around the optimal trade entry at this point. So there was your trade. I hope you found that analysis useful. If you did, please consider giving the video a thumbs up. It really helps out the channel. If you have any questions, leave it in the comments section down below and I'll do my best to answer where I can. And if you're enjoying the content and want to see more videos like this, consider subscribing to the channel. I'm dropping videos more or less daily and it'd be great to have you guys on board. Thanks for watching and I'll see you in the next video.